Hello there, and welcome to this week's episode of Mondays with Matthew. Some of you may remember that several weeks ago I recorded a video where I explored a new program put in place by the Federal Housing Finance Authority to assist homeowners impacted by COVID-19. And that program was, of course, mortgage forbearance. Well, the forbearance program has been in place for a little more than 2 months now. And one of my viewers asked if I would provide an update to let everyone know what's going on with the program and whether it can be considered to be a success or whether there's anything that homeowners or real estate agents should be worried about. And it's a really great question, so let's take a look. This first chart is a unique way to show what was going on with mortgage delinquencies both before and after COVID-19. So you have to divide this graphic into two, with the left side showing the total number of delinquent mortgages before COVID-19 appeared, and the data on the right showing us what's happened after the coronavirus hit the US. Now do remember that this does not show the total number of homes that have entered forbearance, just the homes where the owners were already delinquent on their payments. So on the left, you'll see that before COVID-19 struck, there were roughly 1.4 million homeowners who were behind on their mortgage payments. And of that group of 1.4 million, 1/3, or roughly 450,000, had entered forbearance by the end of April, but 2/3, or 930,000, had not. Now, after COVID-19 appeared, we saw an additional 2.2 million mortgages become delinquent. But of those, a full 85%, or 1.9 million, entered forbearance, with just 330,000 not taking the offer up. Now in total, at the end of April, there were around 4.25 million homeowners in the forbearance program, but only 3.6 million were past due on their mortgages. And that leaves 650,000 owners who were current with their mortgage payments but still in forbearance. Now let's look at what's happened since the end of April. Well, the total number of homeowners entering forbearance has risen by around 410,000 to 4.66 million. But when we look more closely at the numbers, 52% of households in forbearance, well, they had made their April mortgage payment. That sounds great. But I would caution that payment data through early June shows that only 22% of borrowers had made their May payments, so it's certainly not out of the woods. In essence, my read on this data is that a fairly significant percentage of owners took forbearance out of caution rather than necessity, which is borne out by the number of homeowners who are still making mortgage payments, and they're able to do so either because they're still working or they're using the rather generous unemployment benefits that are in place in addition to personal savings. So where are we today? Well, this table shows the makeup of mortgages in forbearance using the very latest data. Now, of the 4.66 million homes currently in the forbearance program, the greatest number are Fannie Mae or Freddie Mac backed mortgages. And this is followed by FHA or VA loans, and finally non-agency mortgages. Now the line below that, well, that refers to UPB, which stands for unpaid balance, and in aggregate, mortgages in forbearance have a combined balance of just over $1 trillion. As far as share is concerned, it's no surprise to see FHA or VA loans with the greatest percentage of mortgages in forbearance. And that's really because those two programs accept lower down payments and lower credit quality than their GSE counterparts. What I am pleased to report is that the number of homeowners in active forbearance, well, that number has actually started to drop. After peaking towards the end of May, the number of homes entering forbearance has fallen for the past 2 weeks, by 34,000 the start of June and by another 66,000 last week. This is certainly good news, And I do expect we will continue to see the numbers drop as we move through the summer and more owners return to work, or if they are already working, they'll in essence start to feel more comfortable with their own personal economic situation. So we know that 8.8% of all residential mortgages are currently in forbearance. And another question I do get asked is whether all of the homes that are currently in the program, well, will they all end up being foreclosed on? Because if that were the case, it could certainly have the potential to depress home values across the country. And again, this is another really great question. And to answer it, we need to understand the equity positions of homeowners in forbearance. And this is very important when considering what might happen further down the road. As you can see here, only 9%, or roughly 420,000 homes that are in forbearance, have less than 10% equity. And it's this population who certainly is at significantly higher risk of foreclosure if they're not able to get back on track once they come out of the forbearance program. And this is because, depending on their circumstances, if a homeowner has less than 10% equity, it is likely, but certainly not guaranteed, that they may just walk away from the home. There's also roughly 12% of owners who have between 10 and 20% equity in their homes. And they're in a bit of a grey area, but I just don't see a significant number entering foreclosure further down the road. Now, this leaves a full 80% of homeowners in forbearance who have more than 20% equity in their homes. And this is a very good incentive to not go into foreclosure, because this level of equity provides options for the mortgage servicers so they can come up with a plan to get the homeowner back on track when they come out of forbearance. The bottom line is this. I find it highly unlikely that we will see a significant number of homes in forbearance going into foreclosure. In conclusion, allowing forbearance was a smart move on behalf of the FHFA, although there was certainly significant confusion when the program first appeared. But we are not out of the woods quite yet. Even though we are seeing a modest drop in the total number of homes that are in the program, I believe that forbearance is going to remain with us for quite some time to come. But as I hope to have demonstrated to you today, I do not see any significant need to be concerned that the number of homes in forbearance are going to have any sort of negative impacts on the US housing market by moving into foreclosure. And when all is said and done, I believe that the program itself will be looked back on as being a plan that offered adequate protection to homeowners who, through no fault of their own, found themselves stretched financially by COVID-19. As always, if you have any thoughts about this subject, or if you have another question you'd like me to address, I would love to hear from you. In the meantime, take care out there, and I look forward to visiting with you all again next week.